Welcome back to Investing Talk Podcast. Today, we're tackling a question many of you have asked us to look into. Is JetBlue Airways a good time to buy now? We've gathered the latest analysis and data from quite a few sources to help you understand the current landscape for this airline stock. Our mission today is really to distill all this information into clear, actionable insights. We want you to feel truly well-informed about JetBlue's situation. Before we unpack all of this, if you're finding this analysis helpful, please remember to subscribe, like, and maybe leave a comment with your thoughts. Your engagement really helps us bring you more of these detailed discussions. Also, if there's a specific company you'd like us to look into next, definitely leave a comment below. And if you'd like to support our work, maybe consider buying us a coffee. The link's usually in the description. Okay, with that clear mission in mind, let's pull back the layers and see what's truly driving JetBlue's current position in the market.
Yeah, and the immediate takeaway from our sources is, well, pretty striking. JetBlue Airways scores a mere 3 out of 10. This unequivocally marks it as a high-risk stock. Lots of significant uncertainties. It definitely sets the tone right away, signaling that this isn't, a straightforward buy or even hold situation. It's one that demands a much closer look at the underlying challenges, the potential pitfalls for investors. For you, the listener, this rating basically means the stock carries a higher than average potential for capital loss. So it's probably unsuitable for those seeking stable long-term returns without taking on significant risk.
Wow, okay. A 3 out of 10, that's certainly a strong signal right from the outset. So, with that high-risk flag waving, let's start digging into the fundamentals. What does the latest financial data tell us about JetBlue's core health? Our sources highlight a trailing 12 months revenue of approximately $9.14 billion. That's the revenue generated over the past year. That sounds pretty substantial, doesn't it? Almost $10 billion. But here's the crucial detail. The kicker really, despite the significant revenue, they reported a net loss of about $386 million. And to put that into per share terms, their EPS, their earnings per share for that same period is negative. It's negative 1.09.
Exactly. And a negative EPS isn't just a number on a page. It fundamentally signifies that JetBlue is not currently profitable. Simple as that. They're spending more than they're earning. And that kind of cash burn, well, it isn't sustainable in the long term. For you as an investor, this raises critical questions, questions about the company's long-term viability, its ability to fund future operations or growth without taking on more debt or issuing more shares, which, of course, could dilute your existing value. This unprofitability also impacts how we can even value the company properly. Standard valuation ratios, like the price to earnings or PE ratio that common benchmark investors use, they just aren't available for reliable use when earnings are negative. It's like trying to measure speed with a thermometer. You're missing the right tool for the job.
Right. No PE makes comparisons harder.
Definitely. And broadening our perspective a bit, JetBlue does serve a wide network. 100 destinations across the U.S., Latin America, the Caribbean, Canada, Europe. They've genuinely tried to carve out a niche, differentiating themselves with premium services like their Mint class and those airport lounges, trying to attract higher-paying flyers.
Trying to stand out, yeah.
But it's crucial to remember they face very strong competition across the entire airline industry. Fierce competition. They're up against giants like American, Delta, Southwest. Companies with larger networks, deeper pockets, maybe more established loyalties. It's not just crowded. It's a constant battle for every passenger, often fought on price. And that's particularly challenging when you're already operating at a loss.
Makes sense. Hard to win a price war when you're losing money.
Exactly. And one other point to note from our sources is the limited availability of detailed debt and cash flow figures. This isn't just a minor data gap. Without seeing their debt load clearly, their precise cash flow from operations. It's like trying to navigate without a complete map.
So more uncertainty there.
Right. We can't truly assess their financial flexibility, their ability to withstand more losses, or their capacity to invest. The negative net income certainly suggests financial strain, but a full picture of their liquidity and solvency remains, well, a bit obscured. Adds another layer of unknown risk for you, the potential investor.
Okay, so given those significant profitability challenges and that somewhat obscured financial picture, let's talk about the stock price itself. It's currently trading around $4.49 per share, give or take. Our sources mention that analyst price targets average about $4.97. Now, on the surface, that suggests an approximately 11.9% upside from where it is now, an almost 12% potential return from the average target. That sounds like a reason for some optimism, maybe. But is that upside truly realistic, or is there a catch?
Well, there's definitely a catch. The catch, unfortunately, lies in the sheer volatility and the extreme uncertainty within those analyst forecasts. This isn't just normal uncertainty, it's a profound disagreement among the experts tracking this stock. Some analysts are predicting significant declines, going as low as an astonishing 5 cents per share in 2025.
5 cents?
Yeah.
Oh, basically zero.
Pretty much a total loss. But then, on the flip side, others are much more optimistic. They're suggesting an upside near $10.31. This incredibly wide variance, it just underscores how speculative JetBlue's valuation appears right now. For you, the investor, this extreme divergence is the real insight. It means there's no reliable consensus among the professionals. That renders individual price targets, frankly, highly unreliable. It makes any investment in JetBlue less about traditional investing based on a clear outlook and maybe more about, gambling on an unknown future, hoping your bet aligns with one of the outliers.
That makes perfect sense. When the experts can't agree, that screams uncertainty. So, beyond the fundamentals and these wild valuations, what do the technical indicators tell us? What's the market's mood, the momentum? Our sources highlight a few key signals. The 14-day relative strength index, the RSI, that's a momentum oscillator. It's at 40.96. That's below the neutral 50 mark, right?
Correct, below 50.
And perhaps even more telling, the stock is trading significantly below its 200-day simple moving average, which sits way up at $5.76. These both point in a certain direction, don't they?
They absolutely do. This really points to strong bearish sentiment and clear downward momentum for the stock. The fact that the 14-day RSI is below 50 suggests selling pressure is consistently outweighing buying pressure. Basically, more people want to sell than buy.
Okay.
And the stock trading below its long-term 200-day SMA. That's a classic technical signal of a strong bearish trend for long-term investors. It's a big one. Furthermore, the 50-day SMA, that's a shorter-term trend indicator, it's at $4.61, also just above the current price. So that just further confirms the weak trend and the lack of immediate upward push.
So multiple indicators lining up on the negative side.
Pretty much. Our sources also highlight moderate volatility at 3.68%. Not extreme on its own, but when you couple that with the fact that there have only been 37% green days or up days in the past month, it paints a clear picture of choppy, mostly downward trading. Consistent upward movement is rare.
So lots of down days recently.
Yeah. And if we zoom out to the broader market mood, the fear and greed index sits at 39. That firmly indicates fear in the market, not confidence or, exuberance. All these technical points taken together suggest the overall trend for JetBlue is weak to negative. There's no strong technical support for the price yet. For a technical trader, this signals caution, maybe even an opportunity for short positions, but certainly not a clear buy signal.
It sounds like the technical charts are flashing a very clear warning message. So beyond the raw numbers in the charts, what's the word on the street about JetBlue? What are analysts saying? How are everyday investors reacting? The analyst consensus, for example, leans quite heavily towards a sell rating, 11 analysts giving it that specific recommendation. That's a pretty strong signal from those who follow the company closely, isn't it?
That's a very strong signal, yeah. It reflects a cautious, even negative outlook from the professionals who live and breathe this sector. Now, while recent earnings did show some improvement, the reported EPS was negative 16 cents versus an estimate of negative 32 cents.
So they lost less than expected.
Right, they lost less than expected. But it's crucial to remember it was still a negative EPS. The company is still operating at a loss. Beating estimates is one thing, actually making money is another. It's like celebrating that you only lost $100 in a game when you expected to lose $200. It's still a loss, just a smaller one.
Good point. Still red ink.
Exactly. And our sources also show the social sentiment around the stock is decidedly bearish. There's clearly more fear than enthusiasm surrounding it online. In broader discussions, for example, we saw a significant uptick in conversations focusing on the company's sustained losses, the intense competition they face, rather than any, potential growth catalysts. This collective sentiment often acts as a kind of self-fulfilling prophecy in the short term, putting more downward pressure on the stock.
Negative buzz can feed itself.
It often does. Furthermore, our sources didn't report any significant insider buying. That's often seen as a strong vote of confidence from executives, directors, people who know the company best. Nor did they highlight any major merger or acquisition activity that might signal some strategic confidence or a potential positive shift. So all these factors contribute to a generally negative perception of the stock right now.
Okay, so sentiment is matching the technicals and fundamentals mostly negative. Looking ahead then, what potential events could act as catalysts for JetBlue? things that could give the stock a boost? And maybe more importantly, what are the big risk factors to keep in mind for you, the investor? Upcoming earnings reports are always key, naturally. The next one's reported around July 29, 2025, according to our sources. And of course, broader macro factors like those always fluctuating fuel prices, the post-pandemic travel demand picture, overall economic conditions, those will heavily impact all airline stocks, including JetBlue.
Right, and the logical next inquiry is, how sensitive is JetBlue to these factors? And what specific risks should you be most concerned about? The risks are significant and they're multifaceted. From a stock-specific standpoint, there's the persistent issue of continued unprofitability. That's the elephant in the room. How long can they operate at a loss?
It's a big question.
It is. Then there's its high beta of 1.76. Beta measures volatility relative to the market. A beta over 1, like 1.76, means it's like a sports car compared to the broader market sedan. When the market bumps up 1%, JetBlue could theoretically surge 1.76%. But in a downturn, it's prone to sharper falls. It magnifies both potential gains and losses. More risk.
So more volatile than the average stock.
Significantly more. There's also the lingering uncertainty around the full post-pandemic recovery of travel demand, especially for that high-margin business and international travel. Is it fully back? Still some questions there. Then you have sector-specific risks, huge for airlines. The notorious volatility of fuel prices that directly impacts their largest operating cost. Even a slight spike can just eat into already thin margins.
Fuel is always a wild card.
Always. Labor issues, too. Often complex union negotiations, potential for costly disruptions, rising wages. That puts further pressure on profitability. Regulatory hurdles are also a constant factor. Think about the recent challenges with their Northeast alliance with American Airlines that faced antitrust scrutiny. Shows how external factors can impact strategy quickly.
Right, that got blocked.
Exactly. And finally, the entire airline sector is incredibly sensitive to economic cycles. Any slowdown or recession can sharply reduce discretionary travel demand, hitting revenues across the board. On a macro level, yeah, an economic slowdown could really hurt JetBlue's top line. Now, while daily trading volume is around 14 million shares, suggesting adequate liquidity, meaning you can buy and sell shares pretty easily, that does not protect the price from dramatic swings. Price volatility remains a very real concern, especially given this whole backdrop of risks we've discussed.
Okay, a lot of risks to consider there, company-specific, industry-specific, and macroeconomic. So considering everything we've discussed, the financials showing losses, the negative analyst views, the fearful market sentiment, all these significant risks. How does our source ultimately rate JetBlue? And crucially, for whom might this stock actually be suitable right now?
The rating holds firm, 3 out of 10. It firmly categorizes JetBlue as a high-risk stock with significant uncertainties. And these uncertainties stem directly from, well, everything we've talked about. Its fundamental losses, those overwhelmingly bearish technical indicators, and the negative overall market sentiment. While there's some analysts' projected upside potential, the risks clearly dominate the current investment landscape for this stock. No question. This means JetBlue is currently better suited for, shall we say, risk-tolerant, speculative short-term trading. It's not really geared for a stable long-term investment portfolio right now, at least not until its profitability and fundamentals show clearer, sustained improvement.
So more for traders than long-term investors at this point.
That seems to be the assessment, yes. For cautious investors who might still be considering an entry point, maybe a range near $4 to $4.03 could be looked at. It might limit potential downside risk since it's below the current price. However, honestly, the more prudent approach for conservative investors would probably be to wait. Wait for clear signs of sustained profitability, improved financial health before even considering an entry.
Patience might be key for the cautious crowd.
I think so. Now, for short-term traders, the ones who thrive on this kind of volatility, you should really wait for stronger technical signals. A definitive bottom or a reversal in trend. Examples, maybe the RSI rising decisively back above 50, indicating a shift in momentum, or the stock's price moving consistently above its 50-day simple moving average, signaling a new, stronger short-term trend.
Look for confirmation signals.
Exactly, confirmation. Additionally, traders should definitely consider implementing strict risk management, setting a stop loss maybe 8–10% below their entry price, so for example around $3.09 if buying near $4.03, and setting take profit targets near those average analyst price targets like $4 and $5.02, but always adjusting these targets based on real-time market conditions and news.
Got it. Manage the risk tightly if you're playing in this space. So what does this all mean for you listening in? In summary, JetBlue's stock faces considerable headwinds. Technical, fundamental. They're making it a speculative and higher risk choice today. The analysis clearly suggests that investors seeking safer, more predictable long-term positions might want to wait on the sidelines for clearer recovery signs, and really a demonstrated return to profitability before considering jumping in. For you, the learner, perhaps the deepest insight here isn't just about JetBlue specifically. It's about how much information, how many different perspectives, financials, analyst views, technical charts, sentiment you really need to weigh before making any decision. So when faced with a stock like JetBlue, how do you personally weigh that extreme risk against the potential, however uncertain, for a significant reward in your own investment journey? Are you someone who maybe seeks opportunity in that kind of volatility? Or do you prefer to wait for clear skies before takeoff? Something to think about. Thank you for joining us for this exploration today.
If you found this discussion valuable, please remember to subscribe, like, and leave us a comment. Your support truly helps us continue to bring you these important discussions. And don't forget, if you have a company you'd like us to look into, let us know in the comments below. We'll be back soon with another analysis based on your sources.